Okay then, welcome. We're going to be reviewing Ichimoku and how to draw support and resist lines with Ichimoku. Um, Ichimoku is a system that was back in the early 30s. It was started. Uh, it was developed by a group of students and it was worked on over 20 years. So, if you think of it back in the 30s, they didn't have computers. He basically was. I'm kidding when I say it, but he was running slave labor camp because he had these students that were plotting this, drawing Ichimoku on graph paper, and it was literally tested from 1930 up until the mid 60s and the late 60s. So it went into about 30 years of development. So when people ask, is there any tweaks or anything to it? Not really. Use it by default as standard. A lot of people. We'll cover time frames next. Time frames on it. I use it on the 5 minute. You can use this on any time frame. When it gets to 1 minute, it's a bit messy. When do I use it? I use it on ranging or trending markets only. Ranging markets, it will fail miserably for the way that I use it. Right now, when I was briefly looking through the charts, it looks like we have mostly ranging. We have one trending here, but it's a good example to show you. So this is a ranging market pretty much here because it's kind of flat. When you're so you know when to use it then, ranging, trending. So we're going to get into the portions of it first, and then we'll take a look at how you use it. I'm going to go skim through these real quick. I do have, it'll be in the link in the video, I have a complete thread on all the parts of it, so if I go too fast or you don't understand it, don't worry about it. I renamed a portion of these with cartoon characters because some people just really weren't picking up on the names, and they got confused, and it was daunting for them, or it was they basically they didn't want to use it because the names kind of made them feel like it was more complicated than it is. All Ichimoku means is one glance. It means one glance equilibrium chart. You're supposed to be able to just look at the chart quickly and know what's going on with the market. I am using one that has alerts built into it for what I want. So we'll start off before we go in. Let's go ahead and go to each portion of it. The first thing we're going to look at, Tengen, and if I say the names wrong, this is why I renamed them, because everyone says them different and it's kind of confusing. Um, Real quick, does anyone not know what a moving average is? Because that'll help me explain it a little bit. So, is it dropping out a bit for everyone or just a few people? Okay, remember I'm recording it, so if it's dropping out, you'll have the recording afterwards. You can type in questions though. So back to my question: does everyone know what a moving average is and how they work? Because it'll help me explain what some of these lines are, and I guess you could say take the mystery out of them, because it's not really that complicated. Okay, basically, so I'm gonna just in case, a moving average, depending on the period, is it follows price. If you put a moving average at period 1, it's going to follow price exactly. If you put it at period 7, it's going to lag a little bit. Period 22, it's going to lag a little bit more. Moving averages are there to let you show momentum and the overall direction of the chart, because if you put a moving average 200 on there, it's going to take the last 200 candles and it's going to show you the direction that the chart's doing overall. What I'm going to be going over the first line is the blue one here, and I'll zoom in a bit. This blue line is the faster moving. It's just an EMA. It's highest high, lowest low divided by 2. So it is a faster moving EMA. The purple line, and it's called Tenkin-san, or what I call it is Timmy, the little dude from Fairly Odd Parents. If you're not, I don't know if everyone knows that cartoon, but I call it Timmy just to keep it simple. He's a younger cartoon character, so he moves faster. The next one, hopefully everyone should know, because SpongeBob's the devil, and everyone should know him. The purple line, which is called Kinjinsen, and again, if I say the names or I butcher them, my bad. But the purple line is Kinjinsen. It is a slower moving, fancy EMA. It's highest high plus lowest low divided by 2, and it's over 22 periods. So this one is going to move slower. It is a very, very good support and resist line, and it is predominantly what the line that I focus on when I'm trading binary options. When do I trade it? Again, I trade it on a trending market. Yeah. Go away, bank. Okay, so the next line, and in my thing I have it as yellow, but right here is Chinko span. It's a white line. The white line is what I'm going to be showing you how to draw support and resist off of. The cloud is also a good support and resist when it's flat like this, but I'm going to show you how to draw support and resist off this white line. The white line is called Chinko span, or in this case, since it's white, I named it Casper, like Casper the Friendly Ghost. So just if I'll refer to them as the cartoon characters. So it'll be easier, hopefully. Okay, so the last part of it, so we've covered three parts of it there. Now, so far we've got the blue line, which is Timmy, the purple line, which is Mr. Krabs, the white line that's is Casper. The next part of it is the cloud. It actually has names, which is Kumo. The lines above and below the cloud have names too. They're Cinco Span A and B. For the purpose of learning Ichi, screw that. It's the cloud. The cloud basically is also a support and resistance tool. When price is in the cloud, think of it like an airplane that's flying through the clouds. There's turbulence within the cloud. You really don't want to place trades inside of the cloud. You want to always place trades above or below the cloud. The cloud draws 22 periods ahead, I believe. So it basically draws 22 candles ahead. You will, when you're setting your charts up at the top, there's a button that says Chart Shift. If you turn Chart Shift off, you lose a huge portion of Ichi. So you want to make sure Chart Shift is on. So starting off, what we look at here is, just looking at this, we had a ranging market, and we can see that price has breached higher. What we're looking at here is I trade forex, and this the only reason I'm jumping into this is because it's showing now. Is we had a close higher than the last swing high. We have the cloud green. We have what's called a TK cross going on. This was a TK cross. Blue goes down below purple is actually an indication of price moving south. We had a TK cross right here, which indicates price is going to move north now. It's just like an EMA crossover. It means it's going to move north. But what you get additionally is we have TK saying it's going to move north. We have the cloud confirming price is going to move north. And if we go back to Casper right here, Casper now is saying we're moving north too. The important part of Casper, and we're going to go back to him because of support and resist, if we look at the two peaks here, here's a peak, here is a peak. That is your support and resist, and I'm going to show you how to draw support and resist off that. But this candle closed higher, so it's indicating that price is going to do a run-up. Even if they're... Right here is our last swing high that matches this one. So price closed higher than that, so it indicates this candle here is going to go higher. If you are trading binary options and you're using a reversal system, just keeping the principles of Ichi in mind, because let's take a look real quick. This is here, and I bet you if I switch to a ranging system, it would have said this candle here was a reversal. So just to demonstrate how Ichi can help you, because I normally run my ranging system and then an Ichi chart, ranging Ichi chart, so I can always refer to Ichi to see, hey, is a run imminent? Do I have all the, I guess you could say, all the components of a run going? Yesterday in one of the rooms, it was the which system is it? The Ashcan, ASHKAN system. We were watching UJ, and everybody jumped into a trade, and I told him, I was like, if it closes higher than 0.08, I think 2 it was, then it's going to run. It closed higher. Everybody that was in it was like, I lost. And I was like, told you so. How did I know that? I used Ichi. So let's just take a look real quick, and I'll switch back just so you can see what I'm talking about. So here is the same chart, and this is a ranging system. And here's this candle right here. By this, overbought, oversold, it had breached Math Murray line. We had this purple line is my reversal point, and it's 5/0 extension 100. So it was saying its price is going to reverse right here on this candle. So the next one, it didn't reverse, and it didn't reverse. How do I know that? Because I was looking at Ichi, and it told me price is most likely going to reverse. This was our key candle here because we had a TK cross on it. It closed higher than the previous swing high. Sorry, I'm choking on my own self here. But basically, Ichi showed me that it was not going to reverse here. So by using Ichi, I could have avoided this trade. And again, I run two charts for every pair I trade. I have one with my ranging system, one with Ichi, so that if I am looking at a trade, I can just quickly flip to an Ichi chart and confirm that I am not looking at a potential run. Right here was the perfect setup for a potential run. Let me get back to the Ichi chart. So right here was the perfect setup because we had a nice range, and this thing broke. It set up perfectly. We had a green cloud, we had the TK cross, we had price close higher, and we had Casper come up above these prices here, which means everything there indicated the price was going to run on. If you have questions on that or anything, just always hit me up, um, and I'll help explain it a bit more. Knowing the forex side of Ichi can definitely benefit you on the binary option side. The reason I say you never want to trade this on a ranging market. Now, I'm going to go into how we trade this with bins next. Did anyone have questions on how I knew that was going to run? I know it's a little bit confusing at first if you've never actually used Ichi or seen why, but can everyone understand why I say this is a run, and if you were using a ranging system, your ranging system right here should have been a big-ass warning sign to not get in that trade. And all you have to do is have your chart up plus an Ichi chart so that you can be aware of what's going on. Okay, cool. No questions there. If you have them, just type them in. But basically, just to sum it up, green cloud this whole time, which means momentum is northward. It is upwards. We don't have any pressure southward. We have blue, which is Timmy, for the most part, riding on top of the purple line, which is Mr. Krabs. Another signal that we have upward pressure. We had the cross. We had price close higher. And we had Casper come out above. Casper is actually important. This point right here, when it started coming out above price, means that we're looking at the run. That is a perfect setup for a run. When I trade forex, this is exactly what I'm looking at. I would have entered in this candle here on a forex trade and taking it north. Or if you're talking binary options, it would have been a call, but it would have immediately stopped me from trading a ranging market. Okay, so next step is... What is the next step? Oh, let's look at how you use this for binary options. Yeah, you can tell I'm not all here today. Ranging market. So we had a ranging market. Let's focus on the purple line only. Let's go into... What am I drawing with this? I'm going to remove a few things. We don't want Tenkin. We're going to ignore Timmy Tenkin for a bit. We'll keep Kinjin on there, and Kumo and Chico. Okay, so just to kind of help you out a bit. We're going to ignore that Timmy exists. Now, when you're actually trading it, you don't want to ignore it, but we're going to be focusing on this purple line. We're looking for bounces of price off the purple line when we're in a trend. Right now, this chart is in a range. I'm going to move to a trend chart in a bit. But if I want to show you how in a range it does fail, so it doesn't fail miraculously, but it's going to fail. So green, which means we're looking for price to go up and then come back down to purple. We're looking for it to cross purple with one level of confluence. That's why I have the extra indicators on here, and I'll go through the indicators that I have, but not to get ahead of ourselves. So we're looking for price to breach purple and hit a line of confluence, and then we'll look for price to reverse and go up. Now remember, this is on a trending market. On a ranging market, you can see how this is a mess. It's not really doing it. It barely did it here. We had price come back down to it here, bounce off it nicely, but then it immediately goes through, comes back up. See how it's what you'd call braiding it. It's going in and out of the purple. So on a ranging market, stick to your ranging system, ignore the Ichis there. Just use Ichi to confirm that when a range is broken, do we have a setup for a run? A lot of times you're not going to have a setup for a run just because price is broken on a range. Like here, price broke the range. And if you don't know what I mean by range, this was... simplifying it, this was the range, and this candle broke out north of it, and everything in the Ichi rules say it was going to run. So if you have it available to you, you can look at your range trading system, jump to Ichi and say, you know what, this would be a dumb trade to get into. Not trying to harp on it, but when I started using Ichi a year ago, my range trading ITM actually went up because I was able, let's say I took 7 trades out of the day. This would have been a trade I would have sat out on, even though on my range trading system, it said jump in. And that's one trade I passed on, so it's one trade I didn't lose on. So combining the two, I definitely recommend. Let's look and see if we can find a trending chart. This one's ranging. Again, look at the purple line. It's being braided in and out, so it will fail. Look for a trending chart. Don't mess with it on a range. This one is setting into a trend. So what are our rules then if we're going to be using this on a trend? The first thing we want to do when we jump to a chart, and again, you will get alerts. I'm going to go through the setting next. First, I want you to understand the concepts. And we'll go through the settings of how I use it. It's alert based, so you don't got to be flipping through charts all the time. The indicator is already set up for you. The first thing we want to look for is we want a red cloud with a downward momentum. If it has flat spots like this, that's kind of a warning sign that it's a weak trend down. And if we look, basically what we're seeing here is we have a range here. And I'm just going to do these about. The range dropped down a little bit, and we have a new range here. We can confirm that because it goes red, a little bit of green, and red. So this would not be your most high probable to run, because you could probably still range trade this. If we look, though, we do have right here, and again, this isn't an every time thing, because let me go up the template again so I can clear it. If we compare this one to the other one, and we're going to focus in on this area right here. So right here, we have red, a little bit of green, and then red. Unlike the other one where it was solid green and we were able to predict that run, what we have here is red, a little bit of green, and red. So the downward strength of this is not as strong. And we're looking at cable. This is UJ. Cable was this one. We had an unbroken green cloud, which means momentum was good. Here, we're looking at UJ. We have red, but then it fluctuates into green and then red. So this is not as strong as a downward. Even though it is plummeting down now, it's not the perfect storm setup that you're going to be looking for. So let's take a look at it again, and then we're going to move on. I'm just trying to give you all a couple examples so that we can so that you hopefully understand. If you have any questions, guys, please type them into chat at any time. I'll stop and explain what I'm babbling about. So let's take a look now. What are we looking for? Because red cloud. So we have red cloud, green, red. So we know right there, there's our first sign. It might not be the best for a straight run down, but it is running down. This is one part of it. Next, we look at the blue and purple lines. From here, when it broke out of the cloud, where do we have blue, which is Timmy? He's the faster moving. For the most part, he is below. Although he spent a little bit of time here, he's below. When price came out of the cloud, typically what you'll see, and this is just after using for it, price coming out of the cloud, a lot of people are going to tell you that price coming out of the cloud is the best time to jump into these runs. It's not. Normally, at least on the 5-minute. Higher time frame, this would be different. On the 5-minute, which if you're looking to trade binary options, I really recommend 5 or 15. Otherwise, you're going to get 1 or 2 trades a day, and you're going to freaking fall asleep. But coming out of the cloud, normally it pulls back into the cloud, then the actual movement will show. So if we look here, we have the TK cross here, which means price coming down, came out of the cloud, pulls back, another TK cross, which says it's going upwards, but it didn't. So here's our final TK cross. Now, what are we looking for next? We have red clouds down, TK cross. And this is, again, to notice, this is not for the binary options trading. This is to notice that a run is about to happen. Since it's on the chart, I want to cover it. But we have the TK cross here. So this is the candle we want to watch. What are we looking for? We're looking for this candle to close lower than this previous swing low and here. Once it closes lower, what's the next thing we're looking for? Is Casper to clear that price range. So what I'm looking for, you little bastard. This is our key area here. Anything below this candle closes below, and Casper closed below it, we now have an indications that price is going to run. So if you're trading a ranging system, I'm going to bet this candle here, this one right here, was probably an indicator of reversal, or possibly this one. What we'd look at, you might have got your reversal out of this, but this candle here, if we even go back to this swing high or swing low here, it closed lower than it. So again, we're looking at not your best thing because it's breaking range. Anytime the chart breaks range and it looks kind of funny, I would jump to Ichi and just confirm that it's not setting up for a perfect run south. We can see this is a weaker run south because of the little green here, and look, you get the green candle, so everything's matching up, indicating it is a weaker run. So again, this isn't how we trade it for binary options, it's just confirming it. So let's take a look at a ranging system. We'll do a different one. Let me zoom in. This is the other one that a lot of people seem to be using these days. These are Bollinger Bands. This dashed line is actually value charts because I didn't want it on the chart. So here was the candle that I thought would be the reversal one, but it wasn't. It was the next one. You did get a good reversal on it. Price is running down, and if you notice from the system y'all use, reversal, this should be a reversal candle. It has 351 left in it. We'll come back to it and see if it actually goes up or down. If I had to bet, I'd give it a 50-50. I think it's either going to doji out or go down because we do, by Ichi, have enough downward momentum. As you can see, that took me maybe 10-15 seconds to decide. I'm trading on 5 minutes, so that gives me plenty of time to decide whether I want to get into a trade or not. So I'm going to leave it just like this, and we'll come back to it. I'll mark it with an arrow that my prediction is down. I might not be right, but it keeps me from losing trades. I'm a very conservative trader. One of the reasons I'm showing this isn't just to learn Ichi, it's kind of, I guess, to show my thought process. I will pass on more trades than I take during a day just because I want those perfect setups. I don't want to risk it because if you can do 8, 9 out of 10 or 6 out of 4, that is so much better for your money. And one of the biggest things I see people with is when they start doing this barely above 60% shit, they get aggravated, their money management goes out the window, they start taking not bad trades, they're still taking setups, but their money management goes out the window, and all of a sudden they're putting bigger dents in their account than they should be, and it's no longer sustainable. They float their account, and done. So that's why I say if you're not passing more trades than you're taking, you're probably doing it wrong. And again, I've been doing this 3 years, so I'm not an expert. 3 years is not long at all in the forex binary options market. But it is where I was failing. I was hitting when I went live in 2010 full time. I was hitting about 68 to 70%, but I was making zero money. The reason was being I was taking some more high risk trades, and as I was going, and I'm going to cover this Friday with with the journal and everything on how I fixed my problems. But just so you're aware why I'm doing these webinars is there are so many good traders out there that y'all are failing because of reasons not trading related, which is money management and greed, or just getting plain old freaking stupid. As you can see, this one is kind of working out the way I said it would go. Even though we had an excellent indication of it going reversal, it didn't because Ichi helped me out on the decision there. Everyone get, or do I need to flip back to the Ichi chart and show one more time on why this would have been a pass trade for me, even though this system, and I bet if I switch to my system, says take that trade. And my system said take the trade too. This little diamond looking thing. If I look at it, I had a Math-Murray line, weak stall and reversal. This purple line is something that I had coded off of a Ken Chow superstructure. It says that would have been a reversal point 2. This is overbought, oversold. RSI is built into this one at 2 levels of RSI. So RSI said it was overbought, oversold, and yet I said no to this trade. So Ichi isn't just for trading the trend, it's for keeping your ass out of trouble. Any questions there? Hopefully not. Cool. If you do, hit me up in Skype, whatever. If you don't feel comfortable asking in the room, I'm more than glad to help explain things. It's your money you're saving. If you have a question, ask it. Well, I'm not going to be one of those people that says there's no stupid question. There's a lot of freaking stupid questions, and if it's in the videos or it's on the forums, I'll point you to it and say, please read there. Then come back to me if you still don't understand it. But don't be afraid to ask questions, guys. My first couple years, I had a mentor that probably wanted to choke the shit out of me because I asked the same question 10 times until I comprehended it. So just because you ask a question and get an answer and you don't understand it, don't worry about it. Ask it again. Okay, so here we have a trend again. We're not getting any binary options setups yet. What we're looking for is when you see these trends occurring, great time to start watching Ichi and watch for that Ichi alert. So this is cable. That's the one we said was going to run. Let's see. Euro, it's going to run a bit. I'm going to try and see if we have anything set up for a pullback trade, which we don't. I will go back and I'll rewind a bit into some charts and see if we can find anything that does it. So right now, basically, I'm not able to show any of the pullback trades. I'll explain the concept of them. Give me a minute just to zoom out on some charts, and I'll see if I can find a setup. If you zoom out on Ichi, what do we notice here? Red, green, red, green, red, red, green. Right there, what did I mean, if anyone wants to answer this, feel free. What kind of market did we identify here? If we're doing red and green, we are in a range. So just by zooming out one, I get an overall picture. Again, this goes back to the concept of Ichi. By zooming out a bit, I see it's the one glance crap that they say. It may be an ugly range, but we're in a ranging market. So it can also help you determine when to use your ranging system or a trending system. Let's go to the next one. I'll zoom out a bit. I think here, okay, great, we do have it. Okay, so right here, see this big cloud going down. This is what you're going to be looking for when you're trading binary options. We want this big cloud going down, and we'll see if we have any trades in there. So I'm going to turn off the auto scroll so that it doesn't keep whacking me around. We'll zoom in on it. So here's the beginning of the cloud going down. What are we looking for? Now, if I don't see it here, then we're not going to take it. What we're looking for first is the first rule when you're trading binary options: pullbacks. Even though the price is below the cloud, we can't conclude that it is in a downward trend. Prices below the cloud. Which chart were you referring to? Was it the one that I was zoomed out on? Okay, so let's go back to that one real quick. I don't want to. I think that was AUD NZD. Okay, the cloud. You have to remember to look at the big picture. Here's the cloud. The closest thing we had to a downtrend was here, but looking at price, it's not really matching up. This right here, see how the cloud is angled sharply up? Price is moving sharply up. This is an uptrend. How did we know about it? Again, this candle here was I guess you could call a head fake. We would have waited on it. It went up above these previous swing highs. Now here's what I'm looking at, the area that I'm looking at for this. All I'm looking at is we had a green cloud. Price right here came above this blue box, because this is the previous swing high that I'm looking at. Price came up, but then it dropped down and closed below it. So for me, that means that if my reversal trading system would have said take a trade here, I would have, because this did not indicate a run was going to happen, because price closed below this point. This next candle, though, comes up above it, and it closes higher. Casper, the white line, closed higher. Oh, not closed higher. It broke higher than this blue box. So this candle here for forex, or if I was in a ranging system, would have been my alert candle to not take a reversal trade, no longer valid. Plus, I probably would have got my ass handed to me on that candle. This isn't 100%, but a lot of times Ichi will give you the warning, stay the hell out. But this is the key candle here. Now, let me zoom in now that we can see it. This is the key candle here of the whole thing. This one, you see how close it was right here? These two candles, no, but if we look, it closed slightly higher than all these candles. Have you ever, I don't know if you'd understand it, they had a cartoon back in the day with Saturday Night Live called the Ambiguously Gay Duo. You couldn't tell if they were gay or straight. Well, you can't tell if this candle it's ambiguous. You can't tell if it's a reversal or a run candle. It's not giving a clear signal as to what it's going to do. It's perfectly borderline with everything I'm looking for to determine, is this candle going to run or is this candle going to reverse? So for me, being a conservative trader, what this one is it's a stop and watch candle. I'm not going to take a trade with the trend, and I am not going to go against it, because it is just about damn perfectly lined up with the tops of all of this. The only ones that it closed below were these last two, but the majority of the candles, and if we look at Casper too, peak, 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 flat and flat. But notice how it's all in this blue area. We're going to get into that after I show you the binary options trades. There's our support and resistance. Notice that the daily 1 support, M5 support, and M15 are all grouped up in this blue box too. Ichi's telling you where the support and resist is. I'm using the indicator to draw it because I'm a lazy bastard. I'm going to show you how to draw it as soon as we get through the blah 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 binary options portion of it. But does that answer your question? As in it being above or below the candle, just because price is above or below the candle, that does not mean you are in a trend. Look at the colors. Remember, we're looking For a trend, we're looking for a solid stream of colors, and we are looking for an angle to the cloud. The cloud needs to be angled upwards or downwards. What we have here, as we're going back and looking, is we have a cloud, but it's kind of like a normal cloud. It's flat, it's horizontal, we're getting bubbles out of it, but it's flipping back and forth between colors. It's going green, red, green, red. Here's our first signal of a downtrend right here, because we have red and it starts moving down. But look at the cloud. What does it do? It goes flat. So it would be a weak downtrend because the cloud's flat. This one is completely different than the rest of these because we have a green cloud and both sides of this cloud are sharply angled upward. That would be your indication where we're heading into a trend. When you see that, it's like, ooh, stop, might want to watch what's going on there. That's cool. So you know the difference on how to use the clouds, hopefully a little bit better now. Okay, so where were we? We are blah blah. We were on, I think, this one. Okay, so this one, let me zoom out again so in case I lost anybody. What I'm looking at is here it is. We have a cloud forming. This flat portion here means we have a weak downward trend. Yes, price is below it. Our blue, Mr. Timmy, he is staying consistently below Mr. Krabs. So we're not getting the braiding. When we're not getting the braiding, which means Mr. Timmy and Mr. Krabs are running across each other, that's another indication that we have a strong downward trend coming. What I look for when I'm getting into these trades is I'm looking for Mr. Krabs to flatten out. Why is that? Because Mr. Krabs is an indicator of momentum. If he is sharply angled down like this, then when I get, and here's what I'm looking for on these trades. Okay, so sharply, the cloud's going down now. What we're looking for is, and I'm going to remove the blue line. Blue line's not braiding, so let's just remember it's not braiding. Let's remove it. And it's tinking. Let's get rid of it. And we'll get rid of the Casper. So all we're going to have is the cloud and Mr. Krabs or Kinjin. So just so you can see what I'm focusing in on. So here's the cloud downward here, and we're in a downwards trend now. You shouldn't be trading your rangings anymore. I have this set up for alerts that when price hits the purple line, it's going to give you an alert. It's going to say price hit. I'm going to show you a couple examples, and I'll show you the perfect one we have, which the support and resist is gone, but here's the principle we're looking for. Okay, so now we're in a trending market. What are we going to wait for? Our alert. As soon as we jump to the chart, first thing we're looking for is the cloud showing strong downward momentum. If it is, great. Move on to your next step. We already know that Mr. Krabs, or the purple line, was hit. That was our alert. It is a on-touch alert. It is not an on-close alert, because an on-close alert is going to be useless. Give me a second. I got to get comfortable. My foot fell asleep. Okay. Much better. Okay, so what we're going to be looking for is price to pull back up. This is a downwards momentum, so we're looking for price to pull back up to Mr. Krabs and bounce off it. Why? Because Mr. Krabs is a slower moving EMA, putting it simply, which means it is a good support and resistance point. So if we watch, this one would have given us an alert, and it would have been a crazy-ass candle. But look at the angle on Mr. Krabs. I would have stayed out of it because I'm looking for it to be flat or slightly bending down. I'm going to mark the first trade that I would have looked at taking, and I would have looked for a reversal here. Price would have came down. I would have got my alert here, but I would have said, hell no, because the angle's too sharp. But even though the angle's too sharp, the concept here, we still got a reversal out of it. But it didn't do what we wanted. So you would have gotten an alert that it touched it, but what we are looking for is we are looking for price to come back up towards it. So if we have a downwards trend, we want price to move up and hit it, and we're going to use the strength of the momentum to pull price back down. So this would have been our first viable trade here. Now, if you're a little bit less conservative or you just want to practice it to demo it, great demo trade. Would I have taken it as it's sitting right now? No. Reason being is I look for one extra reason. Actually, we do have our reason right there. So confluence. Here's our Math Murray line, and I'll show you my setup and what I'm using. I believe I missed that. Right here, this white line. So here's purple. That's our reason. Now we want to say confluence. Can we confirm that bounce? Is there a second reason for that bounce? And there is, this white Math Murray line right here. So it poked through Kinjin or Mr. Krabs, it hit our Math Murray line, we'd enter there. Ideally, your entry, you want it above Mr. Krabs. If you cannot get entry above Mr. Krabs, stay out of the trade. So let's get to where we're at now. Cloud moving down, get our alert that price was touched. Is price coming up to it? Yes, it was. Do we have confluence? Yes, we do. Look to get entry above Mr. Krabs. Does price drop? Yes. Does it work every time? No, but it damn well will get you 70% if you're following the rules. It will take a little bit of time because you're probably going to get in some trades and you're going to be like, ah, shit, I screwed it up because the cloud didn't have enough downward momentum. You will start to recognize it. I do highly recommend demoing it first. I've been using it now for a year. When I'm trend trading, because I would have personally been in a forex trade around this area up here, and I would have been just riding this down. Could you point the confluence again? Sure. Okay, you see the white line here? Let me erase everything but the confluence then. Indicator list. The confluence was a Math Murray line. Let me get rid of the support and resist. Okay, so all we have now on this chart are Math Murray lines. I use the big white line up here is the daily open close. The Math Murray lines are this green line, this white line, this green line. Let me zoom out one so you can see. See the lines? I have Math Murray plotted on here. It's on the God, I can't talk today. The forums post I did has the indicator pack. It is the second indicator pack for the setup I'm using. It does have those in there. The setting for it is 625. I have a more advanced Math Murray if you want it that lets you change colors. This one is just strictly type in 625, good to go, run. So it's not that complicated. But our confluence was, and again, here's a bigger picture of it. We get our alert. First thing we look at is the cloud angled sharply down. Yes, it is. Second, did price move up into Mr. Krabs? Did it ram its head against Mr. Krabs? Yes, it did because you got an alert. That's why you're looking at the chart. So you already know that it's been breached. All you have to be worried about, confluence, entry above, wait it out. So let's go back and look at it again. Price drops down. Price is dropping down. It moves back up. Here's our next alert. Price crosses, what do we got here? Mr. Krabs. We would have gotten our alert. Do we have any other confluence? The price is quite literally right here. Oh, I have ask and bid on. Just give me a sec. We should turn the ask line off because that might confuse y'all. It's how I see the spread. On this one, as it's standing now, do we have any confluence? No, we don't. So what would we do? We would pass. But let's get rid of Math Murray. So let me go up the template again. Template, Ichi. I use two sets of lines for confluence. So here was our first trade. I have auto scroll on, sorry. Let me zoom in a bit again. That might be too much. Shit. I'm going to get rid of the lines again so it's nice and clean for y'all to see. Tenkin, we want gone. False, false. Draw Kinjin, draw Kumo, and draw Chico. False. I'm going to get rid of the Math Murray lines this time. I use Math Murray and support and resist lines. So our first touch here, which was a Math Murray line, and price went down, was right here, if we recall. So this one was our down trade. So the next, following it down, the next alert we get was here, and then a price back down. As the chart stands now, then we have no confluence on this one. So this would be a pass. Now again, I'm a very conservative trader. You could always come back to this and be like, yep, I would have traded it. Most likely, from what I can see, we did have a support and resist line here, but since we have the rest of the chart here, support and resist is redrawn. But just so you can understand what I'm going through, this would be a pass trade because we had it breach, but I didn't have any confluence on there. The red line above it is my ask. Let me get rid of that again so you're not confused. No confluence on there. So that would have been a pass trade for me. It's as simple as that when you're trading binary options. You have your ranging system, learn the hell out of your ranging system. Keep Ichi open on a second chart, and just keep an eye on it. If you get an alert, I use auto hotkey, so I can flip between charts really quickly. Like, that's me moving my mouse. Now, if I get an alert on, say, AUD all I have to do is pop there. Like, I got one on AJ, so it's back one. I'm not moving my mouse. I'm using the keyboard to quickly jump between charts. And then I look at the Ichi chart real quick, then I jump to the alert chart. You will get good enough with Ichi that you can quite literally, it's that good of a system where you can quite literally take 1 to 2 seconds, look at it, then jump to the chart you're going to trade on. If you see the perfect storm setting up, which means price is probably going to run, you might want to be very leery of entering into your ranging market trade. If you can see prices trending heavily, then you don't want to be trading. Ooh, fuck me, I can't talk. You don't want to be trading your ranging system. Switch over to Ichi and wait for the pullbacks. Don't get greedy. Use the confluence. If you don't use the confluence, it's not gonna fail, but your ITM percentage isn't gonna be high. Yes, it's a little more boring because you're gonna pass on a few trades. If you're just learning it, that's great. Screw the confluence. Demo the hell out of it. Okay, so that covers how to do it. Does everyone get the concept of once the market goes trending on how to trade with Ichi doing pullbacks? When the market goes trending, a lot of people try and follow the trend and they get burnt on it. But the trend, it's not like reversal trading. You can't stack reasons for a reversal to happen. Reversal trading is the main reason that most people get in or how they trade binary options because you can stack reasons. Look right here. How many reasons do we have lined up that when price hit here, it was going to reverse? Reversal trading on a ranged market is the easiest way to trade binary options, quite plain and simply, because it's like building a wall. You can just build up reasons for price to hit that shit and reverse. But trend trading is a little different because people look at it and they say, well, like here's, for instance, price is moving up, but what was here? There's nothing here for it to bounce off of, but it did bounce down. So some people take a trade. Ooh, it's going to go up. It's nice and clear, but it bounces. So use the trend to your advantage, but we're still going to stay to the same concept of we can stack a reason for price to bounce on a pullback. So it takes, like I said, you can build a wall for a pullback. The more confluence you have, the more likely that trade's going to succeed. Make any sense on why I do it that way? Trend trading for forex, great, because if you get one candle that pulls back for a bit and then the overall trend takes over, that's great for you because trend trading with forex, it's not time-based, it's pip-based. I could have a trade open for 4 hours as long as I'm showing that I have a lot of momentum moving north. I don't care if it bounces around. As long as it's heading north overall, I'm good. Binary options, though, I have to be able to get in and out with the time constraint that your broker is giving you. So why not adapt your trend to a pullback point where you can stack reasons, take the reversal off the pullback? It's the same concept except as normal range reversal pullbacks, but we're doing it on a trend, and we're using the pullback point as your entry. Okay, so last step, and then I'll show you the indicators I use. Let's clear off. Let me go to template one more time. Indicators, blah, blah, blah. Okay, so I'm going to clear off out of my indicators list. Actually, I guess while we're going through the indicator, while I'm removing them. Okay, in the Indie pack, you're going to have all these indies, ZB cloud lines. This is the one I use to draw the chart. The reason I use it is I just like the way that it looks. You can use the one that I'm going to show you next, or you can use any Ichi one. But 92652, those are the standard settings. Don't alter them. I mean, hell, they've did 30 years of back testing and it's been running, what, 1930? I don't know. My math sucks. The system's been running as is for, let's say, almost 100 years. That's rounding it off quite a bit. Don't go in and mess with them. Some people use 72244. I would recommend just sticking with this standard tried and true. This indicator is, again, ZB cloud lines. Just leave it as is. Everything shows true, 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 true. You can go in and mess with the colors as you want to alter them. And I'm not going to get rid of that one, but I am going to edit it so we can get rid of everything. So let me, Tenkin goes. Okay, and I'm going to show you how I draw support and resist. It helps because, yes, you have an indie, but you can catch a bit more with the eye. Your eye is always going to do better than an indie. As you can see, I'm getting alerts of price crossing Kenjin up, Kenjin down. I'm going to go over what Indie's doing that also. So that's the basis of what we're going to use. Murray math lines. Again, I'm at 626. 625. I must have hit a 6. Step back 0. So there's, again, math Murray lines are settings, 625 and 0. I'm recording this so that way people can see, plus y'all can go back and refer to it to know what settings I'm using. 625 and 0. And that's Murray math. Again, if you need the more advanced one where you can change colors of lines and things, hit me up. I'll send it. Daily open line. What is that? It is inputs. Time zone of data, I'm using 0. The daily open line is, where is it? It's this big white one up here. I make it kind of thicker. It is a very, very important line for support and resist. I even run it on my main charts. So, again, you can put GMT it out to your time zone, plus or whatever. BO price. Now, that's up here. What is BO price? Since I'm trading binary options, BO price is bid plus ask divided by 2. You might have noticed when I first set up, I have show ask line. Why do I have that? Notice here's the white line, which is price. Here's the ask line, which is red. Anything in between this red and white line is your brokers can play with. If they need to fudge price, they can fudge price from here to here. So I like to be aware of that. Now, right here it says 97.6270. That is 62950. I'm 629. I forgot I'm on a 3-digit one. So 629 is right here, right dead in the middle. So the price the BO gives me is right dead in the middle of the bid and ask. It divides it by 2, and it gives me the median. Why do I use that? Because if the broker isn't somewhere around that, then they're dicking with price. Again, the BO price is about where your broker price should be. It's bid plus ask plus 2. If the broker gets squirrely, though, this is where we see brokers cheating, I guess you could call it, because of the spread, and that's right up here. My spread is 2 points, which is 2. Bleh. Now it's 3 points. As that grows, this gap grows. Anything in between here, the brokers can actually fudge price legally without screwing you. Well, I wouldn't say legally. They can fudge price to the point anywhere in between this with that and still be able to stand on 2 feet and say, well, our spread was different than your spread. I'm sorry. So if your price is in between here, they can play with it to that point. But that's why I have that indicator on there. So enough on that. I'll get into that more Friday. Let's delete it. Next one I have is Ichimoku MTF Alerts NMC. In the Indie Pack, this is what's going to give you alerts. If you use Ichi for more than what I do, then that's fine. What I have is 9, 26, 52. Everything that would draw on the chart is set to false. Alerts is set to true. Alerts on on the cloud. Let's not get into anything too specifically. We would turn it to false, unless you want to know when price comes out of the cloud, which if you get into forex trading, good. If you're just doing binary options, here's the setup I recommend. Alerts on tank cross. We don't really care about the TK cross. False. Here is the one we want to focus on. Alerts on price Kinjin cross. That means it's called alert when price touches Mr. Krabs. We want that because that's what you're going to focus on when you're trend trading with Ichi, because we want to know when it pulls back to it. Okay, so alerts on Chinko Tenkin cross. False. The other big one that we need, alerts on current. If you have this false, it will not give you the alert until price closes, and you're pretty much hosed unless you're using a binary option box broker that lets you get in for 4 or whatever trades. But the touch is better because you get to go and look at the chart and you have time to make your decision. So just use true. Don't be a douche. Okay, alert message is true. Alert sounds true. Emails it can do if you're doing higher time frame, but meh. I use that for forex when I'm doing 15-minute and cleaning the house. So again, this is Ichimoku MTF Alerts NMC. You have it in the Indie Pack. Set it up like this. It's on the screen. I'm not going to go through it again. My mouth is dry. Okay, let's remove that. What we're getting to, show pair cool. We don't need that. It's just so that when I'm streaming in another room, you can see my chart name down here. See AUDJPY. Don't need it. Candle time. Don't need it. It shows how long till the candle expires. Spread. Spread is included in there. Why do we want the spread? Because we want to see how much room the broker has time. The larger the spread, I stay away. AUDNZD. I'll show you real quick in a second. Oh, for the majority, I will not trade AUD and ZD. Why? Spread's 4 points, so they have tons of room. Um, watch what I can watch real quick. I'm just going to delete everything off this chart so you can see. This is how much room the broker has. And I'm sorry I jump off the subject, but it's one of the things you need to know if you're trading binary options. Look how much room the broker has to play with here. From this line to this line, they could quite literally fudge price anywhere between this line for you. Because of the spread, they could say, well, at the time of close, the spread was 3, and you're going to say, but price was here, and they're going to say, but because of the spread, price was up here. So always be aware of the spread. That's why I run the ask line on my chart, so I can see. I prefer to have something like this where it's very tight, so they can't fudge price very much. But AUD NZD is just crazy on the spread, and it is all the time. So something to be aware of. Okay, so back to our shittin' fun indicator list. Okay, TLB, OC, VO2, that's support and resist. It is drawn, and mine's going to look a little bit different from here because I'm working on shifting these prices around so that they don't overlap each other. So this one isn't completed. When it's completed, I'll post it up, but that way I can shift these prices around. I do not use the M1. It is false. M5 is optional. That's up to you if you want to use a 5-minute support and resist. Personally, I prefer to have the 15-minute and above. Again, I'm more conservative, so I might lose some confluence by not having the 5-minute on there. But otherwise, you just put true all the way down, other than M1. M1's just going to make a mess, and it's not a very strong confluence point, especially on a 5-minute chart. That covers all the indicators that will be in the indicator pack, what you need to do with them. Now, okay, so next, let's look at how we draw support and resist. This, even though you have that indie, it will miss things. So I'm going to switch to candles, which are all white now, and I'm going to make your candles vanish because I don't want to see them. Bar up, we'll do it to none. Bar down, none. So here's our chart. Will you post the indie pack? It is actually posted on the forums right here. Oh, if I did control. It's there. It's the second indie pack. If you missed anything, it has the basic concepts there. At the end, I'm going to show you who to get more advanced concepts from. Okay, so I'm going to zoom out one. We're going to be looking next, and this is the last portion of it, and then we'll open up for questions. This will work. You can throw you can throw Casper on a normal chart only. Ignore the rest of, and I'll show you what I mean. Well, here, while we're here. You can throw just this white line on to any normal chart. So let's say you wanted to draw support and resist, because it is an awesome way to draw support and resist. So if I made the cloud disappear, this is all I have. You could use this, and if you put it on a normal chart, you could use this to draw like my range chart. I could throw this on my range chart to draw support and resist. Okay, now when you do this, don't get all nitpicky. What we're going to be looking for in general is things to line up together. We're not going to be trying to get exact, and if we have 3 points that line up, we'll take the middle of them. Don't be picky. What I'm going to do is horizontal line. I'm going to draw my first one. What I'm looking at, and I'll explain it. So I have 3 peaks here. I actually have a few more. So I have a peak here, a peak, a peak, a peak, a peak. It sounds like I'm some kind of perv saying peak. Okay, and a peak. Give me a sec. Let me get rid of ask. And let's get rid of grid to none so you can't see anything on this chart. Okay, so now there's nothing on the chart to distract you. I'm going to make these lines a little bit bigger because once I'm done, I'm going to put everything back on the chart so you can see how they do line up with other indicators. So line properties, let's make it, we'll do these a funky pink because I know that's not on there. We'll make them a little bit bigger. All you're looking for, and don't overcomplicate this. This is what I do in the morning. It's part of what I'm going to go over Friday with pre-trading prep. All I do is draw these. It's one of the simplest ways you can do support and resist. So, again, if I wanted to draw it exact, I would have it touching these 2 peaks. But why? We know it's a zone. Support and resist is zone. It's like a magnet. As price approaches it, it'll be repelled by it. So there's my first support and resist. Again, let's go through it. We have 2 peaks here. And up here we have a few more. I'm not picky, I'm just taking it about there. What else can we see? We have valleys and peaks coming down, or up. We can call these valleys. We have a valley here. So I'm not going to draw it so it's touching it, but what I'm trying to do is catch here, here. This one drops down a little bit more, and here. We might be able to draw one down here, but not too concerned about it. That's the wrong kind of line. I'm an idiot. I mean, you can see I'm not perfect at these, but it's going to give you a good general idea of where support and resist were. Could we draw one below? Yep, if you wanted. You can get as many on here as you want, but we know this would be more of an area here. This whole thing here would be a support and resist area. What I mean by that is right there is a consolidation point for support and resist. Here was a ranging market. How do I know this is a ranging market? Just look. Price went up, down, down. We got the upper and bottom of it. Let's zoom out one, see what else we can get. Up here we have a nice one. You notice I zoom in and out just to catch. I'm not trying to catch these perfect. We got our support and resist here, and last one. Why do I mark these? These are what I would be calling an exhaustion point. Now if we go back here, we have this range, but what do we have back here? So why not draw one there too? See how easy it is? I'm lining up peaks and troughs. I'm not doing anything complicated at all. It's really that easy to draw support and resistance. If you're new at it and you don't understand candlestick patterns, it's a great way to do it. So let's throw on a couple indicators then and see how they line up. What was it? TO is my support and resist, I believe. Good Lord, I don't even know my own indicators. Let's go with Murray math lines first and see if they line up anything. Again, we're going to do 6-4 is the standard, so 625, not standard, the default. So what we're creating on the chart is confluence. Up here at the top, we have a weak stall in reverse that lines up with 1. Do these line up exactly? No, but look, they did catch these 2 peaks that I missed. Another one, remember I said this was an area of it, so above, below, in the middle of it, there we have a top of the trading range. This one's actually pretty much closer. This is a major support and resistance with it there, and the bottom of the trading range lines up exactly. Let's see. I'm going to remove the math Murray line so we can see how it somewhat lined up. Let's remove the Murray math. But again, these are to help you create confluence when you're trading. I don't care what system you're trading. If you create confluence along with whatever signals you're getting, it is going to up your ITM percentage. Whether you're trading one of the other ranging systems in the other Skype rooms or whatever, create a little confluence on your chart, and I swear your ITM percentage will go up. Reason being is some people in the world use Fibonacci, some people in the world use pivots, some people use math Murray lines. So whatever they're using. So here we're looking at pivot points. DR1 lines up. Daily pivot, which was what I was talking about, the daily is a big one. It's being ignored. DS1 and our weekly pivot. So we have a nice area of confluence down here, another area of confluence down here. So as you can see, the support and resist is lining up with quite a few things. Not always gonna, but if you get 2 areas together, a support and resistance and a pivot point, a math Murray line, a Fibonacci line, you just created confluence on your chart. So if price hits that area, you get an alert from however you're trading. You're like, God damn, I got a good trade. Let's remove those and we'll do one last one. Indicator list, TA pivots, delete, gone. What do we have left? The hell is the support and resist line? I want to let me look real quick at the name of the indicator. I always forget. TLB. That's why I was thinking TA. So TLB. Here is the one that's going to draw support and resist. Now this is a very good indicator. I do rely on it sometimes when I get lazy. Reason being is it draws from the candlestick itself, not from the wicks. It is one of the first ones I found that did it. So here's our H4 resist. Lines up almost perfect, so you know you did your job good there. Here's the blue again. Do we notice what's happening on the blue? Math Murray lines and pivots have directly in the middle of this thing as a confluence point. So Now we have three separate types of indicators. We have pivots, support and resist, and Math Murray lines that are all identifying this as a high probability point of price bouncing. Down here, look at the freaking confluence we have. Here's ours, then we have H1, M15, and M30. We know if price hits there, it's going to bounce. Down here we have H4 weekly, right below it our line we drew, and then we have a whole ton of shit, and that's why I'm trying to fix the so you can spread it out and see what the hell we have there. We have a ton of confluence there. Let's remove that, and let's put the candlesticks back on the chart and see how we did with support and resistance. Remember, I drew this with no candlesticks on the chart, and it's not like I went and memorized it because I'm too lazy for that shit. Okay, so let's put candlesticks back on. Properties. Bar up, we'll do green. Bar down, red. Hit OK, and let's go back to candlesticks. The reason I took the time to do this is because a lot of people don't believe that it's that simple. I just drew support and resistance